I started to see that the network was reaching critical mass. And so I didn't cover it really in its early years. I wasn't even super into Bitcoin back then. But once I got caught up to speed on the Bitcoin base layer, I started looking around at what else is going on in the ecosystem. And Lightning really caught my eye because I saw that, you know, it got some criticism for kind of, building slowly and not being huge from the start. But due to the way it's fundamentally designed, that's how it had to be. Basically, when you're building channel by channel by channel, you're basically slowly building a network effect over time. And even back then, they were also, they were purposely not trying to grow it super quickly because they were emphasizing security.
With Bitcoin's increasing popularity, more and more transactions are processed on its blockchain network. These on-chain transactions are stored on the blockchain, a shared database with a distributed ledger that allows participants to see all of the transactions that have been recorded. However, the process of validating every transaction can cause some problems for the system, especially when there is increased transaction volume. As a result, the Bitcoin network has faced a scalability issue, a challenge that arises when the network tries to process more transactions simultaneously. A solution to this problem will be for the network to build scale, allowing more transactions to be processed quickly and efficiently. Bitcoin's Lightning Network was introduced to take care of some of these problems. It has helped improve the processing times, build scalability, and lower the network's transaction fees. However, it is undoubtedly a growing network with certain kinks to iron out. The Lightning Network allows people to transfer Bitcoin between one another without fees using their digital wallets. It creates a payment channel between a sender and recipient so they can make off-chain transactions with each other. The network's off-chain transactions help improve the processing time of transactions on the on-chain network, reducing Bitcoin's scalability challenge and making the network generally more user-friendly. Plus, Lightning fees are near zero because of the many zero-routing nodes and liquidity providers that operate across the network. In a recent interview, macro guru and Bitcoin investor Lyn Alden speaks at length about the Lightning Network. As someone with an engineering and finance background, Alden examines Bitcoin's second-layer network from both the technical and macro perspectives. She also discusses some projects that excite her about the Lightning Network and how it's going to change the future of payment systems. Please watch, like, and share this video as Lyn Alden gives an important macro and technical discussion about Bitcoin's Lightning Network. You can also drop your comment and observations about Alden's explanation in the comment section below and subscribe to the channel. Thanks and enjoy the video.
Sure. So the Bitcoin base layer is a broadcast network, whereas Lightning is a multi-sig, set of channels, a network of channels that exists on top of the Bitcoin network, and basically allows for much quicker payments. But of course, it's a newer system. There's more security challenges, more complexity associated with it. And one thing I find interesting is if you look at the map of it, it actually looks quite a bit like the internet did in the early years. And so basically, instead of broadcasting your transaction to the network that gets incorporated into miners put them in the blocks and then it gets put in everyone's node, this is more of a true peer-to-peer system or peer-to-peer-to-peer hop. You could hop from node to node, and I find it interesting because I'm not super technical, especially in the software sense. My background's more in the hardware sense. But when I did engineering management, I had to always understand software enough to basically manage some of the things we were doing, and basically pick between some of these different types of implementations and things like that. And so I try to understand it as best I can, but I still look at it more so from a macro perspective than a technical perspective. But of course, the technical side has to be understood enough to inform the macro side. And what I found interesting, starting a little less than 2 years ago now, was that I started to see that the network was reaching critical mass. And so what I started to see by the end of 2020 and into the really beginning of 2021 was that liquidity was becoming truly usable, and some of the apps and ecosystem around it were also becoming pretty usable. And so I kind of, talking to developers, talking to Elizabeth Stark and others, I started to see that there's a probable inflection point there, that there's more than meets the eye from kind of a macro perspective. And so I've been pretty excited about that part, and I try to get a little bit more technical on that part than I do with other parts of the ecosystem.
Why did we choose to go with a layered approach from both a protocol and a financial perspective? Why is that the right approach? Lyn, you want to start on this one?
Well, so part of it is no one even made the decision. It just kind of had to happen out of nowhere because any attempts to change the base layer proved futile. compared to the near immutability of that layer. And so it wasn't like, there was one person that decided this is the way it's going to scale. This was, it was a conscious design for a number of developers to scale with what they had to work with, but the base layer has been pretty much set, nearly in stone, other than soft forks from the beginning. And people also saw that, there's a reason why those hard forks didn't really work out. Part of this has to do with network effects, but it's also about design decisions. So the problem with blockchains is that they're so inefficient. They're the common saying is that they're bad for most things, other than something that has to be super decentralized. And so if you try to scale too much on the base layer, you make it very, very hard to run a node, which basically removes the individual self-sovereignty, which kind of defeats the point of what Bitcoin is. And it's what a lot of other cryptocurrencies have done. And so, but of course, the big challenge there is that, in its current form, Bitcoin can only scale to so many transactions, and it's pretty slow. So it has these limitations for mass usability. And in engineering in general, and in finance, scaling in layers is kind of the hack that fixes a lot of things. And partially it's because, modularity is basically the name of the game in engineering. Basically, that if things get super complex, one thing you can do is break them into pieces that can conceptually work on their own, but then they click back together, and they're designed to connect to each other. And we also see in finance that in a similar way that Bitcoin has trouble scaling without breaking too many aspects of itself on one layer. The finance system we've been familiar with for decades and going back centuries has a similar problem that banks can't scale the types of transactions they do all on one layer, and so instead we see a stack of multiple different types of payments. And so basically, what the whole kind of the Bitcoin design process has evolved towards is this more layered approach, where you have a nearly immutable base layer. It changes very, very slowly and very cautiously. It's purposely difficult to change it. That's kind of the value proposition. That's more of a feature than a bug. But then on top of that, people can build all sorts of different things. There's federated side chains. There's merge mine. And Lightning is interesting because it's the fastest growing, and it's arguably brings the network closest to its original conception, which is in addition to being a store of value, the ability to make very quick payments with it. And so if anyone's not seen a video, you can look online and watch someone paying with a phone with Lightning, and it's just as fast in many cases paying with a credit card, and similarly levels of convenience, especially as the user experience, the different apps have gotten better over time.
As of early June, there was over 3,900 Bitcoin on the Lightning Network, more than 300% of the number recorded in the same period in 2021. This shows how explosive the network's growth has been, which is a testament to its success in such a short term. But it continues to grow and evolve. In 2021 alone, there were at least 5 advancements made to the network, including the activation of Taproot, which gives developers more tools to work on the Bitcoin network. We also saw the Lightning Network record its quickest 100 Bitcoin capacity growth ever at only 5 days. In July 2021, the network capacity increased by 20% to 1,821.29 Bitcoin. Now, just a year later, it has grown to 4,500 Bitcoin. Despite the immense growth, work has not stopped improving the Lightning Network. Here is Lyn Alden explaining some exciting developments she's currently looking forward to on the Lightning Network.
So the short answer is anything that makes it easier to use and or more private. And so one, I'd first start by echoing what Pablo said. I've been following the green light design work as best I can. And that goes back to the choose your own adventure path, right? So that, you can either run your own node, or you can use a fully self-custodial, a fully, custodial solution. You can fully rely on someone else. And now, they're developing these tools that allow for kind of a hybrid between those two states, where you're, as he described, you're offloading the complexity of running a node without offloading your keys. And I think that's a very useful development. I also am optimistic about, like I said before, some of these things being done to make it more private. I think the Canadian trucker donation event, I think, woke a lot of people up to privacy, and showed that maybe that's an area that has been underinvested in, underexplored. There are really good organizations like Human Rights Foundation that have been focusing on that all along. Shout out to them. But I think that the broader Bitcoin space could emphasize privacy a little bit more. And so any of those implementations or design ideas, I'm optimistic about them making it a more seamlessly private experience rather than one that's kind of prone to these issues. And Lightning already stood out to some extent because during that donation period, both the recipients and their donors in many cases had they ran into problems with the Canadian government. Whereas if you were sending via Lightning, you had some more privacy in that end at least. And so I think that as they kind of complete the privacy picture a little bit more on Lightning, I think that's something to be bullish about. And then lastly, Taro, I'm in the camp that's pretty optimistic about that because we do see that in multiple emerging markets, there's a demand for dollars. They want something stable. Someone described it to me well. He was from Argentina, and he basically was like, under a month, local currency. For several months, I want some stable coins, and for multi-year long-term savings, I want Bitcoin. And so right now, there are some stable coins on Bitcoin, but for the most part, they're on other chains. So a lot of people use Tron, for example, and I think it'd be a much better experience for people to have, like a Lightning wallet, and then they have both a Bitcoin and a dollar balance, because I think that can increase Bitcoin adoption. It can also increase just overall usability for those people. And so I think that for me, it really comes down to those three things: privacy, um, usability, and the possible integration of stablecoins.
In April, U.S. bank Morgan Stanley published a report about Bitcoin and the Lightning Network, stating that the second layer protocol is superior to multinational payments giant Visa. In its report, Morgan Stanley also said it envisions a worldwide Lightning Network adoption. Lightning reached a level of development, liquidity, and critical mass that pushed it over the line into being a truly usable network, the report by Arcane Research stated. In the wake of the recent fragility in the DeFi sector, MicroStrategy's executive chairman Michael Saylor also noted that Bitcoin and the Lightning Network could come to the rescue. The sound ethical, economic, and technical foundation for DeFi is Bitcoin. The next generation of DeFi will be built using the Lightning Protocol and the Bitcoin token, Saylor noted in a tweet. We have a macro guru and investments advisor, a global leader in financial services, and Michael Saylor, one of the most brilliant minds in the space, talking quite favorably about the Lightning Network. What do you think this means for the network, and how do you think Lightning will change the future of payments? Please drop your thoughts and observations in the comment section. Also, be sure you hit the like button and subscribe to the channel for more like this.